Hello there traders, this is Elizaveta, Belugina, the head of analytical department at FBS, and this is our weekly presentation. We are talking about the weekly outlook for Forex major currencies. So let's begin with the presentation. Here it is. And we are talking about the week since December 12th, which will be over on Friday, December 16th, the trading week. And our agenda for today is quite what we usually do. We discuss the market's positioning, economic calendar, then technical analysis and tips, and then summarize everything to develop some trade ideas. And let's switch to our first point. This is Forex market positioning data according to Commodity Futures Trading Commission, or CFTC. You can see that according to the figures for the week which ended on Tuesday, December 6th, the overall US dollar bullish position has once again increased. And actually, this is the biggest bullish bet on the US dollar since January. Traders were buying the US currency ahead of the long-awaited meeting of the Federal Reserve, which will take place this Wednesday, December 14th. And finally, we will find out whether the Federal Reserve actually raises rates. This is now not the most important thing about the Fed's meeting, as traders are almost 100% sure that the Fed will raise interest rates. But now the market players will want some hints on what the central bank is going to do in 2017. And also the market will want to see whether the Federal Reserve is concerned by this increase in the US dollar or not. If the Federal Reserve is concerned by the strengthening of the greenback, then we will likely see a negative reaction in the US currency and maybe some change in positioning data by the large speculators. Still, at this moment, we can see that the market is becoming more and more bullish on the US dollar. We are not at the record highs, so there is still some potential for the American currency to strengthen if there are some really bullish and unexpectedly bullish comments from the Federal Reserve. Also, here are the data for other major currencies and how the large speculators are positioned on these currencies. And we can see that there are some interesting developments in this table. First of all, last week, the previous week, speculators turned net short on the Japanese yen for the first time since the beginning of this year. And we can see that during the week which ended on December 6th, this newly bearish position on Japanese yen has significantly increased. Look at the weekly change and the overall position, and we can see that the major part of this overall net bearish position on Japanese yen was built during the last week on which we have the available data. So speculators turned bearish on Japanese yen, and we may actually see that the long-term yield spreads between the US and Japan widened to the biggest yield premium for the US dollar since 2010. So the current increase in the US dollar Japanese yen currency pair looks sustainable and really has the force of the market behind its move. So as a result, bullish positions in dollar yen look credible. What else can we see from the table? We can see that there are net short positions on the euro. Actually, this position on the euro is the largest net short position, and despite the fact that during the week which preceded the meeting of the European Central Bank, this bearish position has a bit decreased, still it's the largest, it's the biggest bearish bet we have among the major currencies. The market's net negative position on the British pound is also still in place, still quite sizable, and these bearish bets on the British pound limit GBPUSD currency pair on the upside. Other pairs, well, what we can say, Australian dollar is still more or less bullish, not a big change here. Canadian dollar is bearish, and so is Swiss franc. Despite the fact that there is a time lag for this data, still they are important as they help us to understand whether the trends we are seeing in the Forex market are sustainable or not. Let's now, as usually, have a look at the US dollar index. It is important to follow this index as it is showing us the dynamics of the US currency versus the currencies of America's 6 main trading partners. And looking at this US dollar index chart, we can see how the US dollar is moving in general, not versus the euro, though the euro has a large share in this index, but versus different currencies. And we can see that the American currency recovered from the minimum levels around 99.50. The past 2 weeks were bullish for the US dollar. The expectations of the higher rates from Federal Reserve were supportive for the greenback, and also here the expectations of high inflation rate in the US, high US Treasury yields are bullish for the American currency. Today on Monday, US yields actually rose to more than 2-year highs, and this is a big bullish driver for the US dollar. I think that the overall momentum for the American currency should be neutral in this week. We will see a lot of volatility in the US currency. Much will depend on what the Federal Reserve tells us, but there will be other events as well we have to watch. Let's have a look at the highlights of the week in the economic calendar. On Tuesday, we'll get data from China, China's industrial production. Earlier, there were many concerns about China, that Chinese economy is slowing down. And although China takes a big part in world trade, so Chinese data are important practically for all currencies because they affect the market's risk sentiment. Also, during the weekend, there were comments from America's elected President Donald Trump about some trade relations with China, and this is a hot topic for the market. Chinese stocks went down, significantly down on concerns about regulations in this country. So we hear a lot about China in the recent days, and China will likely remain the important spot we will have to watch for such currencies as Australian dollar, New Zealand dollar, and Japanese yen, as well as the currency which is perceived as a refuge currency. And Australian dollar and New Zealand dollar are, on the contrary, risk-sensitive currencies, and they tend to increase if Chinese data are better than expected. Also, we will have UK CPI figures on Tuesday. This is consumer inflation data from Britain, and this figures will likely be a bit higher than expected. All in all, British inflation is expected to accelerate next year, and this factor is preventing the Bank of England from more policy easing. So this can be positive for the British pound. On Wednesday, we'll get more statistics from the United Kingdom, labour market data, and also the Bank of England Governor Mark Carney will comment. US retail sales and producer prices will be released during the US trading session, but the market's attention will surely be focused on the Fed meeting and Federal Reserve's press conference. Traders have been discussing the Fed's actions at this December meeting since I think the start of this year. The talk intensified after the Federal Reserve didn't raise interest rates in September. In November, US Central Bank confirmed that it is ready to act in December, and since then economic data were rather positive. There were also positive comments from the FOMC members and especially the Federal Reserve's chairwoman Janet Yellen. So this is why there is no doubt in the market players that we'll get a rate hike. This is kind of decided thing. So traders will be watching the central bank's statement, the central bank members' forecasts for the key interest rate during the next year, and also what Janet Yellen, the Fed's chair, will say on Wednesday will be most important for the US dollar. As the American currency is rather strong, then the Federal Reserve has to deliver something really hawkish, some hints that the Federal Reserve will raise rates more than 2 times in 2017 in order to provoke a significant rally in the US dollar. Decline will be much more easier for American currency, as traders say, buy the rumors, sell the facts, and this may be actually true for the December meeting of the US Central Bank. On Thursday, traders will be trying to digest the results of the Fed's meeting, and also there will be important labor market news from Australia, the meeting of Swiss National Bank and its press conference. Here we don't expect significant changes. Swiss Central Bank still thinks that Swiss franc is overvalued and is trying to somehow improve this situation to make Swiss franc decline or at least limit its gains. So maybe some attention to this event is necessary if you are trading Swiss franc currency pairs. Another important release from the United Kingdom, retail sales, and another central bank meeting, Bank of England meeting and minutes. So we have spoken a bit about inflation in the UK, and I'd like to add that the Bank of England is in a rather difficult situation right now, because on the one hand, the UK economy shows some good results. It is not as affected by the Brexit vote as some analysts thought it would be, but as uncertainty still exists, as Britain is likely to proceed with its exit from the European Union, Bank of England still will have to stay cautious. So it is kind of balancing between the good economy and the uncertainty which is caused by Brexit. So no changes in the regulator's policy are expected. And commands from the Bank of England will likely be balanced because for now it can only wait and see until the policymakers and politicians somehow make the situation more clear about what will happen with the United Kingdom's future in the EU from now on. The latest data show us the latest news that the members of British Parliament said that they would stick to Prime Minister Theresa May's schedule for Brexit. It means that Article 50 will likely be invoked and triggered in March 2017. However, British government will have to release its Brexit plans and will have to listen to British Parliament when it makes any kind of Brexit decision. So the latest development in this field of politics are a bit negative for the British pound, but not overall negative as nothing is still really decided. And we'll be watching the developments in future. And also there will be US consumer inflation data on Thursday and comments from the Bank of Canada's Governor Stephen Pauls. We can see that the Canadian dollar is getting stronger and stronger on the high oil prices, and it is very interesting how the Bank of Canada evaluates this recent increase of its national currency. Friday will be rather calm, and here we will be watching US building permits data. So all in all, I think that the most intense days of the week will be Wednesday and Thursday, the most active trading days. And here I'd like to point out some bond yields for you. Here is the comparison of the UK and German yields, and we can see that yields in the United Kingdom, which are painted in red, this are 10-year bond yields, are higher than the ones in Germany. We can see that the spread between these yields is changing constantly, but now British yields are higher. British pound against the euro. We will speak about this, then we will look at the chart. And also the spread between US and Germany in German bond yields. Here US is ahead of Germany, and this is why the US dollar feels rather strong versus the euro. Let's now have a look at the chart. And we'll start our analysis with the euro dollar currency pair. Here it is. We can see that if we look at the weekly chart, once again, if we look at the weekly chart, here it is, we can see that Last week, the pair initially managed to get to 108.70 area before it was rejected and finished the week near 105.60 mark. The main bearish driver for the single currency was the meeting of the European Central Bank. The ECB extended but scaled back its monetary stimulus. The regulator extended quantitative easing program by 9 months. But starting from April, the central bank will reduce the value of securities it buys per month from 80 to 60 billion euros. We can see that monetary policy divergence between the ECB and the Fed has become even more pronounced now with this commitments of the European Central Bank. And despite many doubts about the fact whether the ECB will manage to find enough securities to make this quantitative easing really work as planned, the market still thinks that the commitment of the ECB to conduct this quantitative easing means that the European economy is in desperate need of the central bank support. So, of course, many analysts still wonder whether by reducing the monthly amount of asset purchases from April, the ECB had moved towards ending its quantitative easing, but Mario Draghi has talked down the euro. He said that the ECB had no intention of tapering bond purchases towards zero, and that asset purchases could be even increased again if necessary. So this spike to the upside in euro-dollar is a sign that the euro will likely meet resistance if it tries to recover to 109 level. On the downside, we can remind you about support, which is located at 105 area. This is a support line which goes back to the beginning of 2015. And all in all, here we can see strong support for the euro. I think that the pressure on this support level may intensify, especially if we see and hear hawkish comments from the Federal Reserve on Wednesday. And more or less, this divergence in monetary policy will be the main fundamental driver of this pair. So I think that short positions on the euro-dollar will be necessary on the confirmation of decline below 105, or we will be looking for some reversal signals in case euro-dollar recovers to areas of 108, 109. In the euro area's economic calendar, we will be watching German economic sentiment data on Tuesday, the region's flash manufacturing and services PMIs on Thursday, and final inflation on Friday. So, taking into account Mario Draghi's dovishness and what we have said about the euro-dollar, the euro's attempts to recover will likely meet resistance at 107.15, 107.70, and 108.50. Let's move further to GBPUSD currency pair. Here is the weekly chart, and we can see that there was a series of higher lows in GBPUSD. The pair is still consolidating, and only decline below 1.25 will show us that there is a serious attempt of the bears to return the pair to the negative bearish trend. On the daily chart, the picture is rather mild. Resistance is located around 1.28. So once again, to make a summary here, concerns over Brexit may continue to weigh on the pound, and additional pressure may come from UK inflation, labour, current account, and manufacturing data. We will be watching the Bank of England's meeting, but don't expect significant changes. So if the Federal Reserve raises interest rates and gives some bullish comments for the US currency, then we can see that we will probably see that here will be kind of flag pattern which opens the way for further continuation of the pair's downtrend. Still, there was a very small candle formed on Friday. A small candle shows us that the current short-term bearish momentum has decreased, and the pound is perfectly capable to recover to the levels around 1.27, 1.2750 in the short term, especially if inflation data due tomorrow will be higher than expected. Then the pound will be able to conquer these levels until it meets resistance around the highs of December around 1.2775 and ahead of 1.28 mark. Let's have a look at US dollar Japanese yen. And here we can see that advance of the pair is really impressive. The pair is overcoming Fibonacci levels one after the other. On the weekly chart, the pair has managed to get above 100-week moving average, and this is a bullish sign. We are trading above the psychological level of 115 yen per dollar. This is also positive. And as long as the pair is trading above this 115 mark, there is a chance that the greenback will be able to strengthen to the area around 120 yen. All in all, there were comments that the Bank of Japan can taper its monetary policy easing, because the weakening of Japanese yen is doing some work for Bank of Japan, and monetary tightening in the US also is improving situation for Japan, making it less necessary for the Bank of Japan to conduct such extremely loose monetary policy. All in all, on the daily chart, we can see that the pair has retraced back from highs around 116, and if we see here that this daily candle has a long upper shadow, then probably there will be some correction of the pair to support around 150, 114 before some further gains are possible. Of course, the pair has made a very big decline, a big advance without almost any stops on its way up, so some retracements, some setbacks are necessary for this pair. And it's clear that the main driver of dollar yen is the policy of the US Federal Reserve. Here, news from Japan are not very important at the current time. So we will be watching the Fed statement and press conference for the hints on Japanese yen movements versus the US dollar. Another pair I'd like to have a look is the US dollar Canadian dollar. And last week on Wednesday, we talked about the fact that the pair will decline to 100 day moving average just below 1.32 mark. We have declined below this level and there was a gap this week. So I think there is more potential for Canadian dollar to strengthen versus the US dollar, given the fact that oil prices are also trying to renew maximums. Here we can test levels around 1.31 and 1.30, 1.30, the next levels of support for US dollar, Canadian dollar. Fundamentally, the Bank of Canada left policy unchanged at its meeting on Wednesday. There was a strong third quarter GDP reading and positive signs in global economy that allowed the central bank not to change its current monetary stance. So, of course, we will keep watching the Federal Reserve's decision, and maybe by the end of the week, US dollar, Canadian dollar will be able to close this gap, but I think that before we do so, we will test lower levels, support levels for this pair. And finally, a few words about Australian dollar, US dollar. Here we can see that the pair returned to resistance at 0.75. There is a pattern which resembles the double bottom here, but to see some bullish confirmation, we need a close above 0.75 mark, and in this case, the next target will be 0.7580, around 100-day moving average, 0.76. But all in all, I think that the attempt of Australian dollar to strengthen will take place, but will be very short-lived versus the general strength of the US dollar currency. This is it for today. Let's now make a short conclusion of what we have spoken about and what are potential trade setups as we are getting into the Federal Reserve's meeting on Wednesday. This is surely the main event of the week. And the US dollar, although it started the week slightly on the downside, will likely be supported. All in all, traders are completely ready to a rate hike by the US Federal Reserve, but if the US Central Bank gives the market hints that it will raise interest rates more than 2 times in 2017, then the US dollar will be able to strengthen more. Of course, if we won't have such a message, then American currency will be vulnerable for some deeper correction to the downside ahead of the year end. Different currencies are in a different position versus the US dollar. The euro is significantly weakened by the European Central Bank's decision to extend monetary policy easing. And all in all, despite the fact that we have a strong support in euro dollar at 105, the pressure on this level will likely intensify, and we don't see potential for a significant strengthening of the euro dollar above 108 mark. If we look at the British pound, there will be an important event as well, the meeting of the Bank of England, but no changes in the regulator monetary policy are expected. And despite the fact that on the daily chart, we saw that pound was slowly trying to get higher. It was trading with a slight bullish bias. Return below 1.25 will make the pair continue its overall bearish trend, and the pair has resistance around 1.2770, 1.27. We still have Brexit uncertainty, which is limiting the advance of the British pound. As for the US dollar Japanese yen, here we have a bullish trend for this pair. Momentum is getting a bit weaker, but still, as long as we are trading above 113 mark, the near-term outlook for the pair will be bullish. And I'd like to point out that fundamentally this trend is confirmed by the existence of net bearish Japanese yen positioning data, which actually increased during the past week, on which we have data from CFTC. And some bullish moves may happen in Australian dollar and Canadian dollar. We will be watching data from these economies, fundamental data, and there may be a possibility of buying in the short term, but I recommend to have some reasonable and not excessive fake profit levels, as I don't think that the weakness in the US dollar will be really sustainable in these pairs. This is all for today. We'll meet on Friday, when we'll discuss Forex market outlook for 2017, different fundamental trends, and different technical developments which took place in 2016, and try to make suggestions about what will happen with Forex measures next year. I wish you a good trading week, and remind you that this was Elizaveta Belugina and FBS. Thank you for listening to this presentation, and see you in a week. Bye.